even with the excess inventory there, we do not have enough homes in the United States for everybody. They were estimating before the pandemic that there were somewhere around 5 to 7 million homes short. And that hasn't, since the pandemic, there haven't been 5 to 7 million homes magically built that has solved the supply problem. Supply is still there. Home prices are going to remain stable because there's nothing really pushing it down. I mean, home affordability is high, but a lot of people can still afford it. Investors can still afford it. So the concern about home prices, unless you're looking at the coastal markets, you look at the big markets, the ones that hit the news. The ones that hit the news because they shot up. They shot up like a cannon during the COVID times, and they're coming back down to earth. And I am sitting in a house in one of those markets. And so you look at that and you say, oh, wow, these are dropping. Well, guess what? We're not buying in those markets. We're buying in the markets that make sense. We're buying in the markets that made sense going into COVID. We're buying in the markets that made sense to buy in during COVID. And we're buying properties in markets that make sense now that COVID's after, and we're going through it all, and we're going to come out on the other side doing fantastic. Because whenever you look at it, you look at the home price, you look at the market, you look at the interest rate. If you can make this deal work today, this deal is going to work great in the future. Because you're going to have rent growth, you're going to have appreciation, you're going to probably be able to refinance at some point in time whenever it makes sense. But you look at all of this, home prices, interest rates, and everything else, what's happening with rents? Rents are still stable. Again, in those high-flying markets, we've seen rents drop. But in the rents that we're looking at, in the markets we're in, they're stable. You've heard podcasts with our local teams where they say they're doing 3 or 4% rent increases. Rent increases in today's world. That's pretty incredible, but you're able to get the same rent, or even if you've got a tenant, bump it up $20 or $25. And when you bump it up $20 or $25, your ROI skyrockets because remember, you're leveraged. You only put 20 or 25% into this deal. So when you raise your rents, that improves your ROI, but it really improves your ROI compared to what you've actually put into the home. So remember that if you can keep your rent stable or raise it a little bit, you are doing phenomenal as a real estate investor. Another thing to keep in mind is population trends. Continue to look at them, and you will see people still moving to the south, still moving to the southeast, still moving to the Midwest. So where should you be investing? In the path of progress. And even if you missed a little bit of it in the recent years, it is still happening. The flow is still happening. You don't want to jump in at the end, obviously. That's not anybody's goal. But whenever you see what's happening, you see that it's been happening and that it's expected to continue because the areas there aren't changing their rules about business. They aren't changing their rules about taxes. So the fundamentals that are there now that are driving people are fundamentals that are still expected to be there 5, 10, 15, 20 years from now. Whereas you've seen some markets, non-landlord friendly markets, where there's no sign that those are going to change either. And I tell you what, it doesn't matter what political party you're a part of, it doesn't matter what your beliefs are. If you look at where business is going and where the people are going, it's the South, the Southeast, and the Midwest. That is where people are going, and that is where we are providing properties because those are the areas we think long-term you're going to be doing really, really well in.